Hello guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this YouTube channel we teach strategies to become a profitable trader even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. Also, there is a Telegram channel for synthetic traders that would love to join, share your analysis, share your thoughts, and share directional bias. So if you would love to join this Telegram channel, check the description box for the link to the Telegram channel. So in this video, I picked a trade yesterday and I would quickly love to show you the analysis and why I picked the trade. I dropped it on my Telegram channel yesterday, and this is the Telegram channel. I dropped it on the Telegram channel yesterday, and this is it. So this was the analysis. This was the analysis that I dropped yesterday, and you can see the movement to the downside is so impulsive. So I'm going to show you why I picked the trade. Is on Volatility 10x index, 10-1s index, and yes, I'm going to show you why I picked the trade, the confirmation entry, the PO high, and the higher time frame analysis. So let's just go into it directly. So yes, on the higher time frame, we've been trending to the downside. The market has been trending to the downside on 4 hours time frame, to be precise. We've been trending to the downside. We have this movement to the downside. So all I am looking for right now is a movement to the downside. So all I just did was go to 1 hour time frame. I went to my 1 hour time frame, and then I checked out for the last break of structure. So we had this break of structure to the downside. There was this break of structure to the downside. This was a valid break of structure to the downside, and then I know I have my major high here. I am not expecting the market to break this major high. If the market breaks the major high, it simply means I am in an uptrend. I have a change of bias already. So here I had this movement to the upside. There was this movement to the upside, and then I noticed that the market took enough liquidity, and then it entered into our PO high. Remember our PO high, where we have the QML candle, where we have the SC candle. So basically the SC candle and the QML candle actually joined here. So I'm going to be marking out the QML level. I'll be marking out the QML level. I used the QML level. So this is it. And then we had the break of structure to the downside. I have been watching this trade for over a week now. Yes, I've been watching this trade for over a week, and I was just expecting it around one area, and that is this internal area. I was expecting it at this internal area because we broke structure to the downside. There was a break of structure to the downside over here. There was a break of structure to the downside. We had this this inducement. This is an inducement here. The market went up, took out this inducement, making this high a major area, making this area a major area. Then we had this break of structure to the downside. Despite taking the inducement, the market didn't really come into my internal structure. The market didn't really come into the internal structure. So I was still not satisfied at this particular move. So I was expecting the market to break this low and come back to take this high and use this internal liquidity to continue to the downside. So I just marked out this high. I think I have one of the analysis, but I'm not sure I can see where I kept it. I would have shown you where I was expecting the market around this area, waiting for this high to be taken as inducement, because we did not enter into this internal structure. And as you can see, there was a lot of liquidity around this area. which the market did not pick. So I was expecting the market around this area. I was not really expecting it around this area. If I actually saw it around this area, I would have just waited for a more confirmation, maybe a double confirmation, a triple confirmation, or I would just watch the market go to the downside very well impulsively before I decide on what to do with the market. But this was where I was expecting the market. I was expecting the market here. So the market entered into it. I didn't pick the trade because there was no much confirmation here, and as you can see, this was looking like a double top. It was looking like a double top, so I didn't really pick the trade. I did not really pick the trade there. We had this movement to the downside. We had this break of structure to the downside. There was this break of structure to the downside, and I was expecting the market not to break this high, because simply mean if market breaks this high, it is possible for us to take this high and still use an area around this area. So I was not expecting the market to break this area. Definitely the market did not break the area, but the market just created this, and I was not satisfied with this, because as you can see, we had triple top. We had triple top here. The market didn't really give a sharp momentum. It didn't really give a sharp movement to the downside. So I was not really looking for a sell here. Because I'm not satisfied with this particular high. This particular high created here, I was not really satisfied with it. So I was just waiting for what the market would do. If market was going to use this high, this low would break this particular low, because this is also a strong low. You can see that we have wicks here, like there are a lot of wicks. We just have different wicks. So I was waiting for this low to take this particular low, so I could just enter from here. I would have entered from here. If the market had taken this low, I would have entered from this particular PO high and continued to the downside. But the market proved me right anyway. It did not take this low, so I was expecting the market to come back and reach this low and reach this high. I was expecting the market to come back and reach all this week, reach this high, because that is also a liquidity. So I was expecting a hunt of liquidity, and the market will still use this PO high. That was what I was expecting, and the market proved me really right. The market picked out that and used it as hunt of liquidity. We had hunt of liquidity. So after having this hunt of liquidity, what is the next thing? I didn't really enter at that place. I also did not enter at that place. So let's just go into our 15 minutes where I picked my entry. Okay, I picked the entry from the 5 minutes time frame, but let's just go to the 15 minutes time frame and see what happened on the 15 minutes time frame. So we had this 15 minutes time frame. Basically, I was not expecting the market to take this particular low, and I'm going to show you on the 5 minutes time frame why I was not expecting the market to take this low. Let's just check it on the 5 minutes time frame and see the reason why the market should actually not take that low. You can see this was the last low. This was the last movement that we have deep deep corrective wave. We had deep corrective wave here. So I was not expecting the market to even break this low. And remember, at PO high, you are watching the market break a particular area. You're watching the market break a particular area. So I just waited for the market to break that low, and after the market broke the low, I still did not enter. Yes, I did not enter at that area. I entered from here. This was where I entered the market. So just watch me as I explain why I entered the market from there. So after the market broke this particular low, I waited for the market because I got series of confluence. So that was why I entered the market. I was so confident in this particular trade. because it is my A setup. Yes, it is my A setup. And when I mean A setup, it simply means the setup that I am so much confident about, not the setup I am doubting, or the setup I am thinking it might go wrong or it might go right. Fine, the market is based on probability, but here I have my A setup. And when I talk about my A setup, it simply means the setup that I am willing to risk at least 5 to 7% of my portfolio. I am willing to risk 5 to 7% of my portfolio. But for my B setup, I am willing to risk just 3% of my portfolio. Then for my C setup, sometimes I just avoid them, or I just risk 1% of my portfolio. So on my A setup, I risked about 5% to 7% of my portfolio, and it gave me a very good risk to reward. I mean, it was really good. So when I saw the market reacted at this area on the 1 minute time frame, I entered the 1 minute time frame also, but that's not what that's not what we should do here, so that you don't get confused. So I noticed this movement to the downside. There was this movement to the downside. So we had this movement to the downside, and after this movement to the downside, this still did not break this low. It did not break this low. Why? So I am not expecting the market to break this high again. The reason I am not expecting the market to break this high is because we had a good inducement take. I mean, the market really took inducement, and so as you can see, we took inducement, like there was a proper inducement take. So I am not expecting the market to return and take this high again. But I cannot just decide for the market, so I just marked out this low as my external liquidity for this particular time frame. I marked out this low for my external liquidity for this time frame. So after marking this low as my external liquidity for this time frame, now what is the next thing? This was the last place we broke to the downside. Now remember, the market has not taken our external liquidity, so we are not expecting the market to come back and take this internal liquidity. Yes, we are not expecting the market to take this internal liquidity, since we've not broken our external liquidity. And luckily enough, the market did not take this internal liquidity, and as you can see, that is a whole lot of confluences for me. I mean, that's still really a good confluence. So I just marked out this area. I still did not enter at this high. If you noticed my entry from the chart that I showed you, I entered around this area. I entered at this area. Why did I enter around this area? Now immediately we got to this PO high. I have not gotten an entry confirmation. I did not get anything. I can't just jump into the market. Remember, the market can do anyhow, anytime and anywhere. So the market can literally break this high and still go back and say it wants to use amount of liquidity. So I was not willing to decide for the market. I just wanted to watch the market play out, move according to whatever it wants to move. So what I just did was I went to my 1 minute time frame. I went to my 1 minute time frame, yes, but don't get yourself confused on the 1 minute time frame. Like I'm always saying, if you're a beginner, you don't have to get yourself confused on the 1 minute time frame. So I just checked out for this break of structure on the 1 minute time frame, and immediately I got this break of structure, I was confident. I was confident enough to enter the market when it retraced a bit to take my secondary inducement. It took my secondary inducement before I entered into the market. And after I entered into the market around this area, the market, it was a sniper entry. Yes, it was a sniper entry. I just entered into it here. I put my stop loss here. I am not expecting the market to come and reach this high. If it reaches that high, it simply means I need to reanalyze from the 15 minutes time frame and see where the market might be going. So I just entered from there and I watched the market break structure to the downside. I mean, it broke structure to the downside. The market came back for a retest. So after this market came back for a retest and then we went to the downside, I still kept my SL where it was supposed to be, but immediately we broke this particular low. We broke this external liquidity. When we got this break of external liquidity, I shifted my SL to entry. I broke even. I shifted my SL to entry and I was watching as the market was breaking down. Then my TP, where did I place my TP? My TP was here. I placed my take profit here. I put my take profit here. Normally the take profit should be here. Yes, you don't, the take profit should be here. The take profit should be here because this is our external liquidity here. This is our external liquidity, but basically I just put my own TP here. This is where I put my own TP. If you like, you can put your own TP here, but I was satisfied with this area because I already calculated my risk to reward. I calculated my risk to reward. I was risking very little. To gain a whole amount of points. Yes, we calculate pips as points on synthetic indices. So that is exactly how I picked up my trade, and then I watched my trade eat my TP. I mean, it's so amazing seeing your trade go exactly the way you wanted it and exactly the way you've predicted it. The market is so simple. You don't have to complicate things. You just have to watch as market moves and market proves itself. And also you need extra confirmation. Don't risk so much on your C setup. The reason a lot of people close their accounts is because they risk a whole lot. They risk a whole lot on their C setup. You just risk so much on your C setup. You risk 10%, 20% on your C setup. And at the end of the day, you notice you get your accounts blown. Even on my own A setup, I was only willing to risk 5 to 7%. I mean, that's really nice and it's still very much okay, because always remember that the market, you are trading under probability. You are not trading under assurance. I mean, you are not assured of everything. You cannot predict all the market movements. So you are only trading based on probability, and you should trade it that way. You should not trade based on you shouldn't be reckless based on the fact that you are confident in your trade. Fine, you should be confident in your trade, but then it shouldn't be that you are risking a whole lot and you become so reckless and then you just take any trade anytime. I mean, that's still very much nice. Risking 5 to 7% on your A setup, risking 3% on your B setup, and risking very little or nothing on your C setup. If you can get all of this right, just get your double confluences, watch your supply zone being respected, watch series of supply zones being respected. Once you watch supply zones being respected, then you can get your confluences, you can get your entry, and then you're good to go. But if you just jump into the market anyhow, you will just see anyhow in the market. And this particular instrument gave me series of re-entry. I mean, it gave me series of re-entry. You can see we had a re-entry here, we had a re-entry here, we had another re-entry here, okay, we had another re-entry here, and this is my last re-entry because we are very close to the external liquidity. So this is the last re-entry, and then you just enter the market and watch the market break low, and you can see we had good and impulsive movement to the downside. I mean, this distance and momentum is so high. compared to where we started from. So this is just how you need to analyze the market, get your entry very well, get your entry confirmation very well, and you are good to go. So that is just the way you should analyze the market, and you will see that you will be very, very profitable. All right, so that's going to be all for now. I'm going to see you in the next video. Have a lovely trading day and keep living in the atmosphere of profit. All right guys, bye, see you in the next video.